SCHD is one of the most talked about dividend ETFs on the market. We have plenty of dividend ETFs on the market, like you have DGRO, VYM, HDV, VIG. We're just naming just tons of great dividend ETFs you could add to your portfolio. But why do people talk about SCHD so much? Well, in today's video, I'm going to break down 6 reasons why I think SCHD is the best dividend ETF on the market, and why you may want to add some to your portfolio. Hey guys, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more, invest better, and travel more. And if you like this content, make sure to hit that like button and subscribe. And if you don't, maybe my daughter may not like me. She always talks about how I go and work on the camera. She's 2, so if you like this video and subscribe, you'll make her happy. And have her dad go and work on that camera even more. But let's get down to it. Why do people like SCHD? Now let's break it down of what is SCHD. I mean, is it just a couple of letters or this ETF? Now, it is a dividend ETF created by Schwab. It's the Schwab US Equity Dividend ETF. It tracks the Dow Jones US 100 Dividend Index. So that's 100 different companies that are stable, creating and growing their dividends year upon year. And one of the great things is it is not cap weighted, and there is not a company out there that is having more than 4% of the cap. Now, I like SCHD because of a couple of reasons. It's low cost. It has a great yield. It has a great performance, and most dividend investors aren't really looking for that performance, but with a great performance makes it just a bit better to hold in your portfolio. And right now, it costs less. Because in October, it had a 4-to-1 stock split, making it even cheaper. And for us regular folks looking to buy some ETFs, cheaper always sounds better, because then we can load up more and just be having a piece of that market share. So today we're going to break it down, and I have 6 reasons why I think it is the best dividend ETF. Let's start off. Number 1, SCHD has a strong growth of their dividend yield. Yes, if that doesn't make sense, well, let's explain it. SCHD grows their yield year upon year, and since 2011, when they were created, they have averaged anywhere between 11 to 12% growth rate year upon year. Now, if we compare that to one of the other dividend ETFs like VIG grows their yield about 8% per year. So SCHD is getting just a little bit better, like 3 to 4% better than VIG. That means if you look at it, you know that your yield is going to continue to grow year upon year as companies are growing their yield. So, what is this good? Of course. I mean, we don't like the stagnation of having yields just kind of grow by 1 cent or 2 cents like AT&T used to do. Well, we're looking for yields that are growing maybe 5, 10, 15% to grow that yield every single year. Now, as you can see, we'll look at kind of the historics of the yield growth. Now, their first dividend payout was 0.122 cents. And that was not very much. But in 2022, they were paying over $3. Now, as you can see, that is a pretty huge deal. You're going from about 12 cents to about $3. And right now, the dividend yield is a little bit lower just because of that stock split I talked about earlier. But we'll get down to that very soon. And with this dividend yield, as it's growing 11 to 12%, that means it is doubling the yield about every 6 years. That is great news to U.S. investors. And if you are one of those investors, you will know that your dividends are now able to buy more and more of those shares. So when you get to retirement, you don't have to worry about adding any more shares. You have plenty of SCHD and plenty of dividends to help kind of fund some of that retirement glory. So let's go on to number 2. Number 2 is going to be a strong overall performance. Now, when we're looking at SCHD, we cannot really compare it to like a tech or growth ETF. We can sort of try to compare it to like VOO, which tracks the S&P 500, but as you can see, the S&P 500 has been doing pretty well over the last 10 years, and so that has kind of surpassed SCHD. SCHD has grown about 11.5% over the last 10 years and about 13.3% since its inception. Now that is a pretty good annualized return if you compare it to the overall market. The overall market since for the last 100 years has gone from 10 to 11%, and VOO, which is an ETF that tracks the S&P 500, has done about 12.92% over the last 10 years, and it has done about 15.68% since the inception time of SCHD. So, as you can see, the S&P 500 is doing much better, but SCHD is doing pretty well. I mean, 11.5%, 13.3% since its inception. That is some great numbers. And if you compare that to some of the other dividend ETFs, you'll see that SCHD is outperforming most of those ETFs. So that is one of the great reasons of having SCHD, because it's got great performance, it grows its yield. And next, we're going to talk about the low cost that SCHD has. So SCHD has a low expense ratio of 0.06%. That means it is costing you $6 for every $10,000 invested, or $600 for every $1 million invested. Now, if we take a look at some of the popular dividend ETFs on the market giving great yield, you may see that some of them also have a high expense ratio. One of the great dividend ETFs is SDY, which is the Spider S&P dividend ETFs. It tracks the dividend aristocrats. Those are companies that have been growing their dividend for the last 25 years nonstop. Now, SDY does come with a pretty good expense ratio of 0.35%. That means it is costing you $35 for the first $10,000 or $3,500 for that $1 million. Now, as you can see, SCHD is much cheaper, and which makes a huge difference. I mean, $3,500 or $600. Which one would you take? Personally, I would take the lower cost, $600, especially with a great ETF that has great performance and it's growing their dividends year upon year. Let's go on to our next one. Now, as we are looking at ETFs, we're also looking at some of the volatility of these ETFs. And one thing that SCHD is, it's not as volatile as some of the other dividend ETFs. For instance, if we compare it to VIG, which is the Vanguard Growth Dividend ETF, VIG has a lot of different companies that can make it a little volatile. And this could be some tech companies. And as we can see this as in 2022, when the market dropped, VIG dropped about 9.7%, and SCHD dropped only 3.23%, which is a huge difference. I mean, you have some drops and some highs, but SCHD is quite stable. They make sure they have companies that are growing their dividends year upon year for the last 10 years, and they're very stable. Now, compare that to VIG, and you are getting a much stabler ETF that can be added to your portfolio. So if you are looking towards retirement or looking for some stability in your portfolio, you can see that SCHD is not going to have massive drops like maybe VIG. So that is just one of the great benefits of having this ETF in your portfolio. Now let's go on to our next one, and one of my favorites is going to be the yield. Yes, the yield is quite important to many of investors, because when we're looking at dividends, we're looking at companies that give a pretty good yield. I know I talked to my dad, and he's always looking at maybe anywhere between 3 to 5% from a company. And if we look at some of the companies like Coca-Cola or PepsiCo, they're giving about 3%. Now, SCHD is doing a little bit better than 3%. They're doing anywhere between 3.4 and maybe 3.6. It is right now at about 3.5%. and it goes up and down as the share price goes up and down as well. And that is great. If you compare it to some of the other great dividend ETFs like DGRO or VYM, it is doing a bit better. Now let's look at those dividends, as those are some of the highly talked about dividend ETFs. Right now, VYM is getting a dividend yield of 2.66%. Now, my math is not that great, but SCHD has a dividend yield of 3.5%, and that is much better than the Vanguard's high yield dividend ETF VYM. So if we're looking at kind of the yield, well, SCHD is right now trumping some of the better high yield dividend ETFs like VYM. So that is just one of the better parts of having SCHD, the better yield. Let's go on to the last point, which is number 6, and that is the low cost of entry. So in October of 2024, SCHD did a stock split. So they split it in 4-to-1 ways. That means if you had one share of SCHD, it got split into 4 ways, making it just a bit cheaper. Now the price right now is hovering around $28, which makes it very affordable to many people. If you have an account with Vanguard, you may not be able to buy fractional shares of SCHD, so you need to buy like one whole share. Now, $28 compared to like $100 is much more reasonable. So you can now buy just one at a time using kind of that money. I mean, if you can save about $10,000 a year, which is around $27.40 a month, that's around one share of SCHD. That is helping you to create future income for yourself. Now, if we look at an ETF like DGRO, we can see that DGRO is a bit more expensive than an SCHD. It's got one share price of about $62. Now, if we wanted to buy a little bit more SCHD, we can use that money, that's $62, and buy about 2 shares of SCHD for the price of one of DGRO. Now, SCHD is a great dividend ETF that some people may like to hate, some people may like to like it, but that is okay. Not everyone is a dividend investor. Not everyone likes ETFs. Some people like to have many of their stock portfolio full of just individual dividend stocks. And that's some people like my dad. My dad likes to buy and find some good dividend paying companies and add to his portfolio. He doesn't really care much about the performance. He cares about the cash flow. But this just makes it just a little bit simpler. An ETF gathering up 100 different great companies that have successfully grown their dividend year upon year for the last 10 years, making it a quite stable ETF. This is something that it makes it just a little bit simpler to add into your portfolio. We don't know what the stock market is going to hold in the future. We don't know what's going to happen because of new leadership that may come in and out of the government. So it is just great to have kind of that cash flow, kind of that stability in your portfolio. And that's maybe a reason why people want to buy some more SCHD. Now, you can buy this on M1 Finance, you can buy with Schwab, you can buy with Fidelity, or with Vanguard. These are just some great places to buy SCHD. So if you like this video, and make sure to like it, subscribe, and later on we're going to continue to add more and more ETF videos. And up on the screen, I'm going to put up 2 of my favorite ETF videos. One is going to be how to build a great portfolio of ETFs, and one's going to be about some Vanguard ETFs. So take a look at these 2, and we'll see you later.